Two, one. Hello, we are live. Welcome to PropTech Buzz, a podcast channel where we talk to PropTech CEOs and founders from all over the world and learn from them insights about how to build and manage world class PropTech companies. Today, I have an exciting guest with me who is building something revolutionary. But before I introduce my guest, I would like to request you all to first hit that subscribe button. And there's a reason for that because through this podcast, we have some cutting edge, thought provoking conversations with prop tech founders and CEOs, as I said. And if you are in prop tech, you do not want to miss them out. So do subscribe. Anand, our guest, is also subscribed. I know, I know of that. And this is a screening qualifier for all our speakers on the podcast. Just kidding. So let's introduce Anand. Anand, the founder of Alt Realtech, a world's first real estate exchange. Prior to that, he has held CXO roles with large listed real estate developers, with annual operations ranging between 30 million to 1.5 billion, and has a deep understanding of the entire development cycle across capital costs and revenues. Prior to real estate, Anand has held revenue leadership roles across cross-border payments, corporate banking, treasury functions. Uh, he was also the managing director of Damak Properties, one of the Middle East's largest listed real estate developers. Prior to that, he held leadership roles in Purvankara, Knight Frank, and ICICI Bank. With that, Anand, welcome to PropTech Buzz. How are you doing today?
Very well, Ravi. Lovely being on your show, and thanks for finding me halfway away from the globe.
Yeah, I just bumped onto you, but when I found you are onto something, I thought it would be interesting to get to know more about what you are up to. Um, Anand, before we get into the meatier stuff, why don't we start with your career trajectory a bit? I gave an overview, but maybe it will be good to know your transition story from hardcore real estate to what you're building today.
Sure. Well, thanks again, Ravi, for getting me on the show. So I'm like half a banker and half a real estate person, Ravi. So the first half of my career I spent in core banking, which was in the treasury for a while, in corporate banking, in cross border payments. Then after about 10 years in banking with just one bank, which was with ICICI Bank in India, I came back to India in 2009 when all this crisis happened, the financial crisis. I was in New York then. I came back to India, didn't have a job, didn't know what to do, and pretty much stumbled into real estate. Real estate was never one of those things that you want to do as a banker, isn't it? Who would want to, in their right minds, want to get into real estate? At least back then, from the world of banking. But then, as destiny would have it, I kind of found my calling, I guess, in some way.
Hmm.
Um, Real estate is far more entrepreneurial, and I kind
Yeah.
of grew to like what I was doing. I joined this firm called Knight Frank, which was
Hmm.
a international real estate advisory firm. I ran the country for them, sitting out of Bombay for
Nice.
about 4 years. That kind of introduced me to real estate.
Nice.
I ran the residential practice for about 4 years then.
Nice.
And After 4 years, I kind of moved to Bangalore,
Wow.
which is pretty much my home right now. But yeah, I mean, I joined this firm called Puravankara, which was a listed real estate development company. I was with them for about 7 years, ran their P&L. I was the chief operating officer for the firm. So I have deep understanding of the real estate development cycle, both on the cost side, which is the construction side, as well as the revenue side of the business. And after about 7 years, when everything was going hunky dory, I should have just quietly sat down there and made a living for myself. But then, yeah, one thing leads you to another. So I took on a very interesting assignment with a firm called Demac in Dubai. Demac again was a listed developer in that part of the world, or amongst the largest in that part of the world. I joined as a managing director for their business. Did the same thing that I did in Purvankara in Damac, but did that for projects across the globe, right from projects in Oman to Qatar to Lebanon to London and so on and so forth. And After a little less than 2 years there, I kind of got tired of what I was doing. I mean, COVID kind of gave us all a little bit of breather on what we wanted to do in life and kind of reassessed what I wanted to do. I could have taken another job, but then I thought, okay, let me see if I have the courage now to jump in and see if I can fly. And then that's exactly what I did. I jumped. I came back to India in early last year. Late last year, we kind of had some pre-seed funding that kind of gave wings to the idea of alt. So we've been operational now for about 15 months, so that's that's my short
Right.
history. Yeah.
Thank you. Before we get into alt, again, it would be we would not be doing justice if we don't glean out some insights from you because of your extensive real estate experience. So, what does success look like for a real estate company since you have been handling P&L and commercial and also construction side? So, what does success for real estate big public listed companies mean? Is this that you build a pipeline of residential real estate and then sell it for profit? Is that what success means? As dumb as it sounds.
Success everywhere is about consistency, right? I know real estate in general, Ravi. When I'm saying real estate businesses lack consistency, right? I mean, because you may have put together three or four great launch of residential projects in a given year, but the idea is, would you be able to replicate that the following year and grow a little bit? Would that then be replicatable the year after and then grow a little more? So generally speaking, the capital markets do not like the real estate stocks because of their inability to show consistency. The stocks that show consistency are the ones that get rewarded in terms of greater P multiples, larger market cap, and so on. I think success is defined as an entity which lasts for a long time, but while lasting for a long time, it also shows consistent growth year on year. If you could
And
do that, if you could replicate it, that's success.
and why is consistency a challenge?
Because this is not a annuity business, right? I mean, if you leave commercial real estate aside, and if you look at residential development, which is 75-80% of the economic development of real estate across the globe, right? Residential real estate happens to be the chunk of it. In residential real estate, there is no annuity business, which means every year you need to find land, you need to get your development approvals, launch
Mm,
it, and
mm.
again the next year again you have to find another parcel of land, get it approved, and then launch it again. And even if you lose sight of a year without getting any new products in, then you pretty much lose your momentum. So
Since
I
I
mean,
come from software.
every year you start from ground zero in residential real estate. So you again have to sell 1,000 homes for you to grow in value. So if you don't have inventory, if you don't keep bringing in inventory, somebody else is bringing in inventory and they take the market share away. So your ability to bring in inventory consistently, sell them consistently, construct and deliver them consistently, that's the key.
Right. So since I come from software background, I don't understand annuity. I understand recurring revenue. Is this
Correct.
the
Like a
same?
SaaS business, right?
SaaS
Like a SaaS
business.
business. Yeah.
Okay. So it's like the old model where you sold CDs or software once and that's gone. But now it's subscription based. You earn every month. Okay. So
Residential business is not like the SaaS business. Residential business is like making a product and selling it, and then again having to make another product next year and having to sell it again.
yeah. So one time money you make. Okay, got it. And another dumb question. Land as a resource is limited, right? So we have just one planet Earth, and the land is limited. Will the will the real estate industry, residential real estate or commercial, will it have unlimited growth forever, or will it ever slow down? With your experience.
I think we won't see a slowdown, at least in our lifetimes.
Okay.
Most countries are underhoused. You know,
Okay.
so if you leave developed economies. I mean, leave the US out, leave the Great Britain's out. Most countries are underhoused. Even Germany, for that matter of fact, right? I mean, most people don't buy homes in Germany. Most
That's
people
correct.
rent homes in Germany, right? So,
That's correct.
and India is also very similar. Mortgage penetration in India is still 10-11% of the GDP. So we have a long way to go before we house
Okay.
the urban, then eventually house the rural.
You brought up rental and buying. Do you see? I mean, at least I see a lot of signals where the youth today and the generation, the millennials and the next generation post that, are being a little more conservative when it comes to buying. It's called the rental generation. Do you see a trend or mindset changing globally? How do you see that pattern?
I think you're right. I mean, say for me personally, if you take me as an example, I don't own a home. I've not owned the home that I live in for the last 10 years. But I
Mm,
live well. Um, so I think largely people want to stay light, want to stay mobile. But you can't do away with not building homes. Even I need a home. It's just that somebody
ah,
else owns it and I use it, right?
got it.
Just
You need a
because
shelter.
you're yeah,
You need a
just because
shelter.
you're renting does not mean there is less demand for homes. It's
Mm,
just that who is the buyer becomes very different. So hence, for every passing year, you will see residential real estate becoming more like an financial product rather
mm,
than a buy and use product. Like say for example, Germany is a classical example, right? Most of the residential buildings in Germany are owned by funds, right? And people like you and me put money in real estate funds, which in turn invest in residential apartments and give it on rent so that the rental yield becomes a steady annuity kind of an income product for the investors, right?
got it.
So capital will always go towards residential, and,
Got
and a large chunk of it will go. Now, if the developers and product makers who adapt themselves into creating real estate products into financial products
it. Right.
are the ones who are going to keep thriving.
Got it. So the big projects that the real estate companies build, if the mindset changes, then it would be not individual customers, but it would go to investors who would, or this funds company who would own this and give it out on rent, right? So if
That's
people
correct.
stop buying properties, then it would be the investors. Got it. Cool.
So
And then go ahead.
stop being a home for themselves, but people will still invest in a fund, and the fund in turn
Got
buys
it.
the home and then
Got it.
probably gives it back to the same guy for him to rent, for him
Got
to
it.
live.
Got it. I get that, because every individual will never opt out not to have a shelter over his head. Okay, so shelter is not going away anyways. The form of ownership, whether it is permanent ownership or resident or rental ownership, is something that will change. So thank you. That was very insightful. And then yeah, as you said, you branched out into building alt. And this is my favorite question I ask all first time entrepreneurs, because at any given point of time you will have 100 ideas where you should be investing the rest of your life. Maybe when you build a startup or your first company, you're going to commit your next 10, 15, 20 years. Why did you pick this industry, alt? First of all, what is the business of alt, and how and why did you decide to make this your next venture?
Okay, so let me first talk about how did I stumble and become an entrepreneur myself.
That
So
would
it
be great.
was a great brainwave. It wasn't some undying ambition to become an entrepreneur. Mine was entrepreneurial by accident. To be honest, that's what happened when I left India and went to Dubai. I didn't have entrepreneurial ambitions. But then somewhere down the line, probably it has always been at the back of your mind. It doesn't come into your conscious, and situations put you in a particular point when you choose what needs to be done. Right at that point of time, when I was in Dubai, I chose, okay, should I look for another job and then do the whole thing, play the whole rigmarole all over again, or do I put my energy and see whether it pans off, right? It is scary, it is risky. I mean, not having, I mean, salary is the biggest drug, right? Once you get onto this thing called salary, it's very difficult to come out of this addiction. uh,
Please dig deeper on this one, because this is very, very relevant to me at this given context. So
yeah, I mean,
I understand the emotional transition from somebody who's earning pretty well for the kind of responsibilities that you had, to somebody where you stopped getting your salary.
yeah,
Yeah.
I mean, that's I think more than the fact that it will really hit you, it is a fear. Entrepreneurship is about just saying, okay, I mean, how difficult it is for somebody like you and me to get a job. Okay, if we do what we want to do, and if we fail, so what? In another 2 years, I'm perfectly employable. So are you. Somebody would give me and you a job, right? A rupee more, a rupee less, a dollar more, a dollar less is what you'll be at.
Yeah.
So it's just gumption and just um just losing track of that fear and jumping in, and that's what happened to me. So I just said that no, let me not try and find another job. Let me try and do this.
Got it. So
It's not easy.
it was not about you stumbled on a very exciting opportunity which has massive potential, and then you thought, hey, if not now, then when? Instead, you decided that you want to go solo, and then you picked an opportunity. Is that how it is?
Correct.
Got it.
I mean,
Okay.
there came a point in my life where I said, okay, I don't want to do what I was doing. I
Yeah.
want to do something else. I could have found another job because what I didn't want to do was the job that I was doing earlier. So I could
Hmm.
have found another job. I said,
Right.
instead of finding another job, let me see what else I can do. Then the idea of alt kind of came in. It got curated. It found belief amongst various people that I spoke to, and then morphed into something substantive.
Got it. Maybe you could let us know what is alt, and what was the trend that you saw. I think we were discussing earlier on fractional ownership, democratization of real estate investment. Where did you see these trends that you wanted to capitalize upon while building alt?
Sure, sure. I mean, so the idea of alt comes from the fact that I just wanted to create a dematerialized real estate instrument, and see if we can recreate what, say, a stock exchange does for the capital markets, a commodities exchange does for the commodities market, a bullion exchange does for the bullion market, right? I said, okay, if at all you do something for the industry, leave your footprint on the sand, as they say, and that's something that I want to do. I wanted to be the first one to build a real estate exchange, and there are no real estate exchanges across the world. Astonishing asset maybe, real
Mhm.
estate is one of the largest asset classes. Strangely so, equities have exchanges, commodities have exchanges, bullion has exchange, energy has exchange, but real estate doesn't have. Somebody has to do it. So
Well,
hopefully,
help me understand. So there are REITs, right? Real estate investment trusts. So these are all. You can also buy shares, which eventually is owning a piece of real estate, right? So
correct.
is that different than what you are trying to say?
I mean, REIT is also listed in the capital markets. So REIT, yeah, REIT is the closest that comes to what we are planning to do.
Got it.
Where we come to be a REIT, Ravi, whether it is in the developed economies or in India, you need to be a very large asset owner, right? If
Mm.
if you're a Blackstone, if you're a Brookfield, if you're a KKR, and you own $1 billion of assets, then REITs make economic sense for you to kind of use that route to monetize your assets into money, right? Monetize your real estate assets into money. But if you see the world at large, and
Yeah.
India more specifically, imagine driving on any streets of Bombay or Bangalore or Delhi, or for the matter of fact, Munich, where you're from. Just look at both sides of the road, you know,
Mm.
and you'll find that every single asset, real estate asset, is a small and mid-sized asset. So from a doctor who owns a small little dispensary, it could be $5 million, it could be 50 crores, 60 crores in Indian rupees, but
Right.
it's small. You go further down, you'll find a small little school. The guy has been running that school for 20 years. It could be
Right.
50, 60, 70 crores.
Right.
So uh, the world is filled with mid-sized asset owners.
Okay.
That's the world that we all live in. And REITs are not the ideal path for
Mm.
these assets to be brought in. So
Mhm.
what we are in essence doing is to see if the small and mid-sized assets,
Got it.
can the asset in itself,
Mhm.
be brought in as a standalone dematerialized real estate investment opportunity for people to subscribe.
Got it.
So what we've in essence done in alt is we've created a new financial instrument, a
Mhm.
digital asset, which captures the economic value of 1 square foot of real estate.
Okay.
Okay. So the rights, obligations of that instrument has been written in, and then we have created a stock exchange like marketplace where this instrument can be bought, held in custody, settled instantaneously. That is what we are creating. So in essence, what we could do is we could go bring in a school
Right.
from your neighborhood, where let's say the school owner wants to sell out and go. He's not able to sell because it's a complicated asset. It's large. It's not small enough for two HNIs to come and buy.
Right.
It's not large enough for a fund to be interested. And and the world is filled with these kind of assets, right? So we go speak to him, bring that asset into a platform. Let's say the asset is a 100,000 square foot asset. We write 100,000 of these contracts, allowing, theoretically speaking, 100,000 people to own that asset. And when
Hmm.
they own the asset, each digital asset or the instrument that they own, represents 1 square foot of that specific underlying asset. So people have a discretionary decision making idea. In a REIT, you don't have a discretionary. You give the money to the investment manager and he decides what needs to be done. It's a
Right.
pool of assets. You can't clearly identify, demarcate where you're investing. Whereas in what we are doing, so if you are from Bangalore and if there's a Bangalore school that is being brought in, it's most likely that the city of Bangalore, the Bangaloreans, are the ones who are going to buy into that instrument. So
Hmm.
that's the way that we are
So, so
building this.
very, very interesting. So you're talking primarily about a very, very small fractional ownership. However, this brings out interesting scenarios, right? So when a building or a school, or you're also, do you also include commercial, all kinds of real estate, I suppose?
So we don't want to focus on office space.
Okay.
We are not focusing on primary end use residential. All the class of assets that fall in between, which is rental housing, hostels, senior care, holiday homes, land, schools, industrial warehousing, retail, hotels and resorts. That's the space that we are operating
Right.
in.
So traditionally, when there is a property, there's an owner, okay, and then there are legal documents on who the owner is. In this world, I'm very interested also about the legal and regulation framework around this. Okay, it makes things complicated. So, if that property is owned by 100 people, who is the actual owner? I know the underlying technology is blockchain. It has its own ledger, but for the on the legal side, who is the owner? Is this something that translates also on the legal side, outside in the public domain, that this property is owned by 100 people? Can you explain this conundrum here?
Sure, sure, sure. So finally, so before I get into that, Ravi, you mentioned briefly about fractional real estate, right?
Yeah.
So fundamentally, the biggest problem in real estate is liquidity, or the lack
Mm.
of liquidity, so to speak, right?
Yeah.
So most real estate assets are illiquid, so
Right.
you may break your, what does fractional real estate does? It takes, let's say, an office floor,
Yeah.
let's say a 50,000 square foot office building, it could be 50 crores, and it allows, let's say, 50 people to come in and buy into that asset,
Right.
So which means each one, let's assume if it's a 50 crores and 50 people put in, each one is investing, let's say, a crore in Indian rupees, right?
Mm.
So you allowed entry into the asset with a crore, into a
Right.
50 crore asset, you allowed entry with 1 crore, but it still does not provide you liquidity when the guy who's invested 1 crore wants to exit. So the only way fractional real estate also gives liquidity is that you have to wait until the underlying real estate is once again sold.
Is that
You
how it
know,
is? So if because there are some exchanges already, I know even in India. I thought if I'm a fractional owner, I could also exit whenever I want. I can't, is it?
um, I mean, if you own an apartment, right, you
No,
can exit, right?
if I fractionally own an apartment or an office space, commercial, okay, and I own, say, I give a crore and I own one tenth of the space. I thought after a year or whenever I feel like, I could sell it with the current market price. Is that not how it is?
You can theoretically you can, but it is very illiquid. To
Mhm.
find a buyer who wants to give you another crore and get in and do this transaction, it is like selling unlisted shares. Can
Hmm.
you, if you have invested in, let's say, a startup,
Got it.
let's say you put in 1 million in alt,
You have to
You
wait for the
can
liquidation event. Yeah,
sell. Of course, you can sell, but is it easy to sell? No, of course, it's
no,
not easy to sell. It's very difficult to sell those assets, right?
that's correct. Yeah.
So it is not instantaneous. It is a lot of paperwork. One needs to verify if you are selling an unlisted share. Are you really the owner? It's a piece of paper. It's not on
Mm,
the ledger. So it is a very cumbersome process. What we
mm,
are doing is, let's assume you put in a crore. Okay.
correct.
Now you have in the tokenized real estate world, when you put in a crore, the crore is broken into square footage. Let's say
Mm,
a crore has gotten you 1/10 of that 100,000 square foot building, which means 10,000 square foot.
right.
Now, in your wallet, which behaves like a demat account, you would have 10,000 contracts.
Got it.
Each contract represents 1 square foot. Now,
Got
when
it.
you want to sell it, you don't need to find another guy with a crore ready in his bank to give you, right? You
Mm,
theoretically sell 1 square foot for 10,000 rupees. You can sell 10 square foot the next day for 100,000 rupees. That's the beauty, and that's when real estate becomes liquid. If you can sell it the way you want, in units that you want, and if you allow a large audience to come and participate in it, it creates liquidity. That is exactly what we are doing. So, in essence, we are solving the lack of liquidity, by creating these new financial instruments. So, in the future, a fractional player can actually come and list some of their instruments on our platform,
got it.
thereby creating liquidity even for their investors. It need not always be all finding an asset and bringing it to the platform and then distributing it. It could be another fractional player also coming in, and so we are a marketplace, so to speak.
Got it. Let's draw a parallel. It's very radical. So, but let me get my concepts clear here. Let's draw a parallel with public market. When you buy stocks, when you are about to sell or buy, the dynamic pricing of that day or that hour play comes into play. How does this happen here? So, do you also? I mean, how does valuation for any property happen? At what cost will you be able to sell it?
I think it's a fabulous question. Great that you asked that, right?
Mhm.
Um, so every digital asset, I mean, for want of a better word, let's say we call it the token, right? A token represents 1 square foot, of a specific asset. Because we are a shallow market to begin with, we are not a very deep market to begin with, right? I mean, it's a new
What do you mean by
exchange.
shallow?
Shallow means there are not enough buyers and sellers today.
Ah,
Imagine National Stock Exchange
right.
20 years back.
Got it.
National
Got
Stock
it.
Exchange 20 years back was not very deep. There were not enough market participants. So we are like that today. We would
Right.
want to become a large exchange in the next 5 7 years, but today as we speak, the market's not deep enough. So when, let's assume that you have 5 Hyatt hotel tokens, let's say the Hyatt hotel is in Bombay, and
Right.
you have invested 5 square foot of that specific asset. Now, you had invested, let's say, 1 year back, and today you want to sell it. How do you determine what is the price of the token on that specific day? Similarly,
Right.
somebody who wants to buy, how do they determine what is the price at which they need to buy, right? So that's where we as a platform come in. We have developed a very interesting algorithm that determines the price of every token at 9 a.m. when the markets open on a given day. So every token, we mimic the capital market process
Mm,
in most ways. So there is a market price and there is a limit order, right? So let's say
mm,
you have Infosys shares, you have 5 Infosys shares, and you want to sell it. You can either say, I want to sell my 5 Infosys shares at market, which means at market it just gets executed. It doesn't ask you the price. Whatever
right.
the price at the market, it gets executed. Or you can say, no, 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 I don't want to go at market. I want to put a specific price at which I want to sell Infosys, and which means that goes under limit order, where you determine the price at which you are willing to transact. So
Right.
very similarly, our platform also has a market price and a limit price. And the user has a choice to either take the market price or the limit price. Now, when he takes the market price of of that particular token on that specific day is determined by the platform and announced to all users. So you may say, okay, I want to sell my 5 Hyatt tokens at market. There is similarly somebody else who says, I want to buy these 5 Hyatt tokens at market, and the platform kind of executes this. The algorithm itself is a unique proprietary algorithm. It determines the price of the token based on its income generation ability, based on its net asset value, based on the 364-day T-bill yields which is Government of India security, which is the interest rate prevailing in the market at as on today morning, a combination of liquidity premiums and liquidity discounts, a whole range of parameters are put in to determine the price of the token that day morning.
So that was you answered. I was about to ask that. Okay, how do you? What's your valuation model? So you have your own models that generate a valuation of a property every day based on various factors, as you mentioned, your yield factor. Okay, how the location of a property. Maybe new projects come up nearby, so the valuation goes up immediately. Um, is that how it is? So is this very dynamic based on lots of inputs?
It is dynamic. It determines the price once a day at 9 a.m. in the morning, and then reassesses the price the next day morning.
Mm,
It acts very similar to a bond. So let's say you want to buy an HSBC's US dollar bond. It's $100 bond, 6% interest rate, but today the price is $94.
mm,
HSBC's bond face value is $100.
right.
Okay, but today's market price is $94 because today the interest rates have moved to 7%, whereas the HSBC is giving 6% yields.
Right.
So based on various parameters, based on the bond's current income, so very similarly on Hyatt Hotel's current income distribution
Right.
yields to what are the interest rates in the market at a given point of time, to
Right.
the long-term projected real estate growth rates,
Right.
okay, to how much liquidity, how often is the Hyatt Hotel tokens being traded? Is it modest trading volume? Is it low trading volume? Is it high trading volume? If it's very high trading volume, you get liquidity premiums. This is very low trading volume, you get liquidity discounts. So based on a combination of these parameters, and this is a machine learning process. So the algorithm will become better and better in every passing day based on more and more data that gets accumulated. But today it's based on some static parameters, and we'll start learning as the system becomes more deeper.
Got it. And for a layman to trust this algorithm, I mean, I also come from prop tech industry, and I also deal with AVMs, automatic valuation models, where you give an address of a property anywhere in Europe, and these AVM models give you the valuation. And usually they test it out with multiple AVMs, and then they come up with an average or where you are deviating from the actual transaction price. That's how you know how good you are. But for a layman to trust your model, what are the things that you would provide them? Do you make your models transparent so that they can trust? Because you otherwise you have unlimited power on deciding what that asset value is or what that token value is any day, right? So people need to trust you. How are you resolving that trust? Because you are not a public exchange, okay? You're still a private exchange. What are you doing to do that? Have you thought on these lines?
I think the biggest trust comes from your ability to give choice to your users, right? So I think that's the fundamental part of it. We can make our models as transparent and as easily understood as possible for the user, but finally, the user needs to still be able to say, do I want to transact at market or do I want to put my own price in, which is the limit order, right?
Mm,
That choice is given to the user, and that's so finally the user decides whether he wants to believe in my price or he wants to determine his own price for the stock that he owns, for the square footage that he owns. I think that's where
but
that's where we are.
if he determines his price, he has to wait till the price reaches that,
No,
right?
he has to find a willing buyer, right? For example, you go to the National Stock Exchange and you put, let's say, Infosys share market price is $3,000, right? And
Right.
you have five stocks and you say I want to sell it at 3,100.
Right.
Okay, the market is showing that price is 3,000, but you put it at 3,100 because you believe that only at 3,100 you want to sell.
Right.
Now, if the market moves to 3,100, or if there is a willing buyer who's willing to buy it at 3,100, your Infosys share gets
Ah,
executed.
I didn't know
So
that. I
very
thought only when the market moves to 3,100, you are able to sell.
the market
So
moves
you
to 3,100 because somebody in the market says 3,100 is a good price. That's how the market moves, right?
got
Market
it.
is a
Okay.
is a combination of various individuals or various constituents, right? Somebody in
Got
the market has decided 3,100 is also a good price to buy Infosys. So he buys it and your stock gets executed. And the market together moves to 3,000.
got it.
Sorry,
Excellent.
3,100.
Yeah. So maybe some of these questions could sound dumb to you, but these are very natural questions
Yeah. No,
to
but
ask. So you mentioned about the you mentioned about your proprietary AI ML model. Do you want to delve a little bit on the other technology? So for people who do not understand a blockchain, um, maybe could you shed some light in a layman's language? I mean, you don't have to be very technical, but what does a blockchain enable to a layman here?
sure, sure. So we are not a platform which is completely on the chain. There are certain processes that are on the chain, and there are certain processes that are off the blockchain.
Mhm.
Because real estate is still, while in India we don't, there is no license that is currently available for a real estate exchange.
Mm.
But then there are various laws that are applicable to us. Just because there is no license for us to avail to be a real estate exchange does not mean that we are in wild west. There are various laws that are available, and I need to ensure that my offering sits within those existing red lines of existing laws. I can't breach any existing law.
Right.
What that means is real estate is a regulated subject, right? I mean, who can own real estate in India? Only Indians can own real estate in India. So a Russian or an American citizen or a Chinese citizen cannot come and buy and own real estate in India. Real estate is a regulated subject. So based on these things, uh, our entire offering is to ensure that the title and the cash flow of the title stays within the ambit of Indians. So what we've done is the following, Ravi. You asked a little bit about the title. Does the title move to the 1 square footage fellow and things like that, right?
Yes.
So let's
Yes.
assume I identify a real estate. Let's say it's a school. It's 100,000 square foot school. Let's say it's 100 crores in Indian rupee value. I first get an SPV to be set up, a
Mm.
special purpose vehicle. Okay. The special purpose vehicle has only one purpose, which is to raise money through a private placement process and buy this pre-identified asset at pre-identified terms and conditions. Okay.
Right.
So let's say 100 people put in 1 crore each, or
Right.
200 people put in 50 lakhs each. The SPB has 100 crores. It purchases the real estate, pays stamp duty registration to the local government registrar, and the title for the property moves from the previous owner to this SPB.
Ah, nice. Okay.
All
Got it.
right. So what we have done is the following. We operate very similar to a REIT, right? So
Mm.
in structurally speaking, theoretically speaking, they are like a REIT. So what happens is uh, now the asset is 100,000 square foot, right? The title cannot be split to 100,000 square foot. The title in
Mm.
the real estate is still only one title.
Got it.
But real estate has two parts. Real estate has financial value and real estate has ownership value. So the
Okay.
ownership rests with the SPV, right?
Mm.
All the financial value of the real estate, which is, let's assume, the rental that the real estate generates,
Mm.
the total cash flows that the real
Right.
estate generates, when the real estate is eventually sold,
Right.
all that proportionate to 1 square foot is written into a smart contract, written
Got it.
into a digital asset. So you are virtually buying the financial value of the real estate rather than the title itself. The title perpetually stays in the REIT, just like how in a REIT, right? The trust owns the real estate. You
That's
buy
right.
the units. Just
Yeah.
because the units are being bought does not mean the real estate title is moving back and forth, right? So
Got it.
that's exactly what happens. So the title is held in custody. A custodian holds the title. A third party custodian of repute holds the title of the
Which,
property.
which is the SPV in this case.
SPV is an entity, but the physical property documents are
Uh-huh.
given to a custodian. Let's say an escrow agent owns the
Ah,
title of the property. A third
okay.
party escrow agent. So theoretically speaking, alt cannot tomorrow say, okay, I'll sell the real estate, take the money, and run away, because the title of the property is held with a custodian. All the monies are run through escrow accounts. So alt cannot access the cash flow. So
Mm.
every user, let's say for example, you come on to altdrx.com, you through a 60-second nine process, do KYC. The moment you do KYC, you get a 3-in-1 account. You get a dashboard where you can put in your orders, you can punch in, you can figure out what is your portfolio value, and then you get two wallets. One is a wallet which behaves like a demat account. It
Hmm.
holds digital assets.
Right.
And another is a wallet where you have to add money so as to be able to buy anything on the platform. This money that you add into your wallet sits on an escrow account.
Ah,
So I
okay.
cannot access your money. So theoretically, at any point of time, there is an escrow agent who knows who is the beneficial owner of the money that lies in the escrow account. So God forbid if alt vanishes after 3 years,
Hmm.
the escrow agent would still be able to figure out, okay, Ravi's wallet number is so and so. He's the beneficial owner of this wallet ID, and he held in his account 100,000 rupees. So
Who?
immediately whether the alt stays or not, the escrow agent will be able to disburse the money and disburse the assets.
So maybe since I'm new to this, who is the what is this entity, the escrow agent? Who is it? Is it who defines this? Who owns this? Is it a person? Is it an individual or a company?
An escrow agent is theoretically somebody who handles the bank account on behalf of two parties. Let's say there is a buyer and seller. Okay, let's say
Uh-huh.
for example, I want to buy, um, uh, let's say the iPad that you own, for example.
Right. Hmm.
And you say your iPad is $1,000, and I agree, great, I will give the $1,000.
Right.
I'm constantly worried if I give the $1,000 to you, would you send the iPad or not?
Ah, okay, okay. Okay. It's the regular escrow when you do any property transaction. Got it.
Correct. Correct. Correct.
Uh,
So
but
the
help me.
escrow is the bank account. The escrow is the bank account. The money is actually lying in a bank account. The
Right.
guy who is responsible for the money in the bank account is neither you nor me.
Uh-huh. So who is it?
That is an escrow agent.
Agent. So are these actually people, individuals,
These are institutions. Many
institutions?
of them, I mean, like for example, debenture trustee holders. There are SEBI approved debenture trustee holders who
Got it.
hold debentures on behalf of people. So these kind
Right.
of people play the role of an escrow agent. So a
Excellent.
reputed third party plays the role of an escrow agent, handling all the money of all users.
Got
All
it.
users are constantly adding money to their wallets so that they can buy 5 square foot, 10 square foot, 3 square foot,
Got
5 square foot. When
Got it.
that money is being added, you know, the users of alt can be rest assured that the money is held in escrow and the
Got it.
money is handled by an escrow agent. So
Got
that's
it.
the comfort that we give. And the title to the property is similarly the property, the physical title documents
Yeah.
are held in a safe custody, which means in a
Mm,
fireproof safe, in a third party safe. And the conditions as to when the documents can be released are all pre-coded.
mm,
So such conditions will the property title documents be released. So it's held in custody.
got
So
it.
at any point of time, hence the token, the digital token, always has the value of the underlying asset because the money is held in escrow. The property title documents are held in safe custody. So the token always maintains its integrity of its value.
Got it. So since this is we're listening to this business model is something, a private exchange for the first time in real estate. What are the regulations like? Like, is this approved? Like, does it need any regulatory sign off and stuff like that? How does that look like?
When the first bank came in, there were no banking regulators. The
Right.
bank came first, and then the regulators came in later, right?
Right. Yeah.
So, I mean, just because there is no regulator does not mean that you can be reckless. I mean, in fact, the onus on you to be more responsible is even greater because there is no third party regulator. So,
Right.
people like us will have to be extremely prudent. That's why, for example, nobody is told alt that you need to hold users' money in escrows.
Mm,
I don't need to hold the money in escrow, but then I have to be extra prudent. I need to be able to earn the trust of my users. So hence, I've ensured that all the funds of every user will always be held in escrow.
mm,
So there are various laws, Ravi. I mean, while there is no, like I said a while ago, while there is no licensing law, when
mm,
MCX came in India, multi commodity exchange came in India,
mm,
the laws were written in parallel for a multi
mm,
commodity exchange, right?
mm,
So we will also come to that point at some point of time. We need to gain girth and breadth and flesh and bone in our business. At
mm,
some point in time, I'm sure the regulations will catch up. But then, as we speak, we are very careful about our proposition itself. For example, we don't take investors' money and decide on their behalf where the money needs to be invested. The cardinal rule across the world is, if somebody gives you the money and says, "Hey, Ravi, here is my $1 million. Okay. I trust you. You decide where to invest the money and give me my returns." The moment that happens, Ravi needs to have a license.
Hmm. Okay.
Ravi says, "Hey, Anand, here is that property, you know,
Hmm.
and here is the seller, and why don't you go and buy that property? I have ensured that the seller is willing to sell this property to you at $1 million."
Right.
That means I am taking a conscious choice. Ravi is telling me
Hmm.
that he's helping me find the property, but
Hmm.
I am not giving you any discretion on how to use my money. That's called non-discretionary investments.
I
So at
see.
all points of time, all the offerings on altdrx.com
Hmm.
are non-discretionary investments, which means the customer comes and decides where to put the money in.
So is
He
it
at no point of time surrenders the right to us to decide on where to deploy his money. So these are non-discretionary investments.
so your exchange, will you, is it a marketplace of all the properties that are ready to be traded in
You can assume something like that. Yes,
so eventually it will be like that, right? Because they cannot say that I want to get a piece of this property, because if that property is not ready to be dematted by you, then it's not possible. So eventually you will build a marketplace where you will keep adding inventory that are dematted. Am I right?
that is correct. That is correct. On one hand, I'll keep advertising saying the coolest way to own real estate is to own it in its digital form. Come open an account on all DRX in a matter of few minutes. You can buy and sell real estate for as little as 10,000 rupees. So users are coming in.
Right.
As users come in, they are waiting for what to buy. I keep adding properties. I broker deals with sellers. I encourage them to come on the platform and list their asset, and then the investors decide what makes sense for them. That's
Okay.
that's that's what happens.
Let's now talk about incentives. So how, what are the incentives for people to list their properties there and for users to come in? So users, I can understand it's an alternative investment model. But for the owner of the properties, what is the incentive for them to list it in your exchange? Oh, so
Liquidity.
that they could liquidate their asset partially. Is that how it is? Okay.
They
Whenever
can
when.
liquidate it partially. They can liquidate it completely. And remember, I mean, we are giving liquidity to the small and mid-sized assets, in the country.
Hmm.
Small, I'm not talking about one apartment. When I'm saying small, I'm talking about 25 crores. When I'm talking of mid-size, I'm talking about 100 crore assets. These assets, the bulk of India's real estate is held as small and mid-sized assets. Those kind of assets, they struggle to sell. Real estate is very easy to buy, very difficult to sell, right? If you want to sell your 50 crore office asset, if you want to sell your 50 crore rental housing tower, if you want to sell your 75 crore senior care or a hostel or a holiday home, it's not easy to sell. So we basically solve mid-size asset owners liquidity issue. We bring them onto the platform. On the other hand, we have users who buy these assets
Let,
in
let's
its
talk
digital.
about let's talk about mindsets, because we are talking about small and medium asset. Okay, the owners might need financial help and they would want to dematerialize their property in your exchange. However, they don't need to dematerialize the entire property. They could they do also partially?
Okay. They'll have to dematerialize it completely, but they can hold some in their own demat accounts and they can sell the rest to the general public. I'm using these words very loosely, demat accounts. So we don't issue demat accounts. We
Yeah,
issue wallets.
yeah. I'm just
Those
being literal.
behave
I'm
like
being
demat
literal.
accounts.
When I say dematerialize, digitize. Okay,
Yeah,
that's how it
yeah,
is.
yeah.
Let's avoid the term
Yeah.
because
And
this
the
is very
other thing,
interesting.
we need to see finally if the common man's money comes into a, let's say you own a school,
Mm.
it's 100,000 square foot and you want to dematerialize it, but you don't want to sell the entire asset, you want to sell partially.
Partially,
Okay.
yes.
The moment that happens, the assets control needs to move from you to me. So I am the property manager. I'm the master property manager. So
So
what that means is,
even if he has the majority ownership of
yeah, yeah.
the
So you
demat.
have to you have to transfer the title of your property to this SPV.
Mm.
Now you own 50% of this SPV. You no more own 50%. You no more own the real estate. You
Got it.
own now 50% of the SPV that owns the real estate.
Got
Now
it.
this SPV is managed by me.
Got it. Mm.
Okay. So I have to render service to you, and I also have to render service to the 500 other individuals who've invested money in this asset, so
Got it.
that they can be rest assured that you're not going to take them on a ride.
Got it. Could he ever decide to buy the whole of the property back and again list it out of your exchange,
Yeah,
delist
I
it?
mean, so these are tokens. So once you've sold, it's free market, right? You can decide to buy it back.
Yeah.
If all the remaining 500 people who bought those square footages from you, if they are willing sellers, they'll sell it back to you. If you offer them the right price, they will sell it back to you.
And then you can delist it, and then you can take back the
You can do
ownership.
that.
Okay,
You can
got
do
it. Excellent, because these are great. So, what are you doing for the? I'm sure if you are an early mover, it's hard. That's why some businesses it is easy to be the second mover, because the first mover has done all the hard work in educating the market, and then it becomes easy. So, are you putting your attention towards educating the market on this kind of exchange?
Yes, we've started that process, Ravi. However, this business needs to have capital at scale. We need to have capital scale. This is not a business where you can raise $3 million, $4 million, and then build it to something large. This business, I mean, in the next 4 years, I would be raising at least $150 million. You
But
know,
why? So, you're not acquiring it, right? So, you are just an exchange where you're not buying anything. You're just an intermediary. Am I right? Or where is the money?
um,
Are you
the
acquiring?
capital, the capital needs to go into two parts, Ravi. Let's assume the same example. Let's say the school owner. Let's assume you are the school owner. You own the 100,000 square foot asset, and I'm telling you, Ravi, why don't you bring in this platform? Why don't you bring in this real estate into this platform and sell?
Mm,
And you have two options, right? You have the ability to sell this real estate to another single party, who another real estate broker has brought into your
got
office,
it. Got it. Got it.
or to me, right? And
Got it.
that other guy is saying, okay, sir, I'll cut a single check to you at 80 crores. You think the
Mm,
asset is 100 crores, but that guy has the ability to cut a single check, so he's offering you 80 crores.
got it.
Whereas I'm telling you, I will be able to offer 100 crores. I think your asset will be able to get 100 crores. But
Got it.
then you will say, can you? How long will you take to raise this money? I'll say
Mm,
probably 100 days to raise this money.
got it.
How much can you place us as an EMD right now, as an earnest money deposit right now?
Mm,
So I might have to place 5 crores, 10 crores to lock in certain number, to give you confidence, to negotiate the price of the asset from a position of strength. So I
got
need
it.
to have some capital available for what is called as asset underwriting, to
Mm,
underwrite assets to be brought into the platform. Simultaneously, I need to have money to acquire users. I have to constantly advertise. I need to say, people are going to ask, who the hell is Alt?
mm,
So I need to tell them that this is who I am. I'm worthy of earning your trust. Who we are, what we are, how we take. I mean, all these questions that you asked, right? I need to I need to tell people that this is how we
educate.
are doing. So customer acquisition and asset underwriting.
Got it. And what would be your underlying business model? Is this you since you're an exchange, you'd make a small cut on the transactions between buying and selling of the digital assets? Is that how it is?
Um, so there are multiple revenue models, Ravi. One is when I'm helping you sell the school that you owned.
Mm,
So if it was another broker, you would have paid him 2-3%
correct.
placement fees, right? So similarly, you are placing your asset on the platform which I'm facilitating. So I'd get some placement fees from you. That's the first source of revenue, right? Subsequent sources of revenue is management fees from investors.
Correct.
Because every day I'm managing this underlying school asset, so I get management fees from from
Got it.
from from this. There's a very unique management model that we follow. That's proprietary, possibly in a private conversation. I'll tell you as to how
Yeah. Yeah.
that works. The rest of it is what is called as tokenomics, which is what is the economics of the token trading, how often the tokens are traded, what is the market cap to token annual trading volume.
Right.
That determines how much of transaction fees that we make on our
Got
exchange.
Got it. Excellent. Very, very interesting. Very radical in a lot of ways. I wish you all the best on this. I'm very, very closely paying attention to to this model. And I'm sure other players would play catch up to this, isn't it? I'm very curious to know why others haven't ventured into this. Is there? I mean, you talked about all the nice things. What are the challenges for building such a model? Is
I
it
think first comes the belief and subject matter expertise. Most people think, oh, it's not possible. It's not regulatory possible. Oh, this is not possible. I don't think you will get licenses to do this. I think that's the first thing. Imagine the first banker who decided to start a bank was dissuaded, saying, oh, no, 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 you cannot do it. You can't take money from public. Or you wouldn't have banks in the economy, right?
got it?
So, I
So
mean, the
that's why
world
it's path breaking. It's path breaking. You are doing all the hard work, as I said. Okay, I get. So thank you. So that is the hardest part, and that's the test of your entrepreneurial spirit, isn't it? So what are your immediate plans in the next year or so? Is it to raise money or to get more inventory on your platform? What are your plans in the next couple of years?
I think the moment you become a startup, there's perpetually a bowl at the rear pockets of your trousers, which is ready to take out and say, I'm there to take some money. But capital raising is a continuous process, and we need capital at scale. So capital raising will continue perpetually. But simultaneously, our core business would mean that I need to bring in a choice of assets, and then I need to get depth in terms of how many customers that I need to have on my platform. Somebody like a Zero that today has approximately 30 million users.
Hmm.
Uh, my path should reach a million users as soon as possible. But if I have a million users on my platform, and each of them, even let's say, have a trading power of 20,000 bucks a year, that means I have 2,000 crores of purchasing power on my platform. So we imagine then what it could do to all the sellers of real estate. When I tell them I have 2,000 crores of purchasing power that's available on our platform, that's when the choice of assets would begin. So it's a both things need to be grown parallelly.
Could it also evolve into, just like in REITs, there are commercial REITs, there are residential REITs? Could it also evolve into everybody who wants to invest in hospitals? Okay, so there could be, you could it could have a sectoral ownership of hospitals, and they would put instead of one building, they would buy a fund or something of that sort. Could it
Yeah.
also evolve into that, or do you think that they would be actually buying pieces of individual properties?
No, I think all kinds of these imaginations will have legs to stand on. I think the first is to have 10 hospitals. The moment 10 hospitals assets are listed, then there could be a mutual fund like platform which comes and launches for hospitals. Yeah, all these are possibilities.
Excellent. Well, this brings us to the end of a fascinating conversation with Anand. Anand, thank you for sharing your wealth of knowledge with us. As I said, this is very very revolutionary and radical. I'll be keeping lots of people will be keeping a keen eye on that. And thank you for demystifying this sector for us and taking time out on a holiday from India. Thank you so much.
My pleasure, and I never get tired of talking about alt. It's just such a passionate thing that I carry. But I have to tell at the same breath that it's not just me. There are a whole bunch of us trying to do this in alt, and many of them are friends. I have 6 or 7 co-founders in this platform along with us, and without them being part of the journey, this journey wouldn't be as exciting as it is today.
All the best again, Anand.
Thank you.